Good morning, ladies and gentlemen, and welcome to today's session. Today, we will be talking to you about all the different things that affect you and your company, your parastatals, as it pertains to everything pension. Today, we have tagged today's session as Pension Mastery, 2023 Employer Forum. This is to say welcome once again. Good morning. Hope you've had a lovely day so far. Please, we would like to ask that you pay attention. We have the full complement of a professional from Stanbic IBTC Pension at your disposal. If you have any comments, any questions, anything that you are not clear about, please feel free to go to the Q&A section of the chat room and post your questions, your comments, anything that you require clarity on throughout this morning's session. My name is Olubumi Oyetan, and I will be your host for today's session. I'd like to say welcome once again. And the contents for today's session are now what you would see very soon. We will just talk through the pension industry. We will talk to you about the recent updates. We'll talk about how to make your pension remittances, things to look out for, common mistakes and errors that are made, which leads to uncredited contributions. We will talk about accessing your benefits, which is probably one of the most important segments of today's session. And then at the end, we will take questions that have been posted in the Q&A section. So today is going to be a wonderful session. It's going to be interactive. Please, all the questions that you have there, all the questions that your staff have been asking you about, anything at all that you are not clear on, please feel free to share with us and we will answer all those questions. So let's get right into it. And to kick us off, I will call on our Chief Executive, Olumide Oyetan, to give us the opening remark. Olumide, over to you.
Thank you very much, and good morning, ladies and gentlemen. Welcome to Stanbic IBTC Pension Managers Employers Forum 2023. It is a pleasure to see such a diverse representation of companies gathered here today, united in our shared objective and aligned with this year's theme, Pension Mastery, supporting employees in their journey to retire well. Retirement, as you know, is a critical phase of life, and we must support our employees in their journey towards a secure retirement. Not only does this contribute to their well-being, but it is also fosters growth for your organization. Research has shown that a comfortable retirement is linked to higher employee satisfaction, productivity, and retention. By providing retirement benefit packages that cater to the specific needs of your employee, you create an environment that attracts top talent. Simultaneously, you motivate your employees to remain dedicated and focused on their jobs, knowing they can rely on a secure and well-planned retirement. This event's primary purpose is to provide insights on how you can motivate your workforce to be more involved in the contributory pension scheme and help them achieve the post-work financial independence they deserve. We will share useful tips on relevant updates in the pension industry, such as the pension-backed mortgage, transfer window, and revised retirement and terminal benefits regulation. We will provide insights on how to manage pension remittances for your employees and deliver step-by-step guides on the benefits application processes, including robust information on the documentation required to onboard employees, as well as assist your employee access their pension benefits at retirement. It is essential to emphasize that as employers, you play a crucial role in contributing to your employees' retirement savings. Retirement planning can seem daunting for employees in this ever-changing economic and regulatory landscape. Therefore, as employers, we must encourage our people to start planning early and equip them with the necessary resources and tools to achieve their goals. We are here to support this vision, and our team of pension experts will be available to provide guidance and support for your employee retirement plans. Please participate actively in today's forum and leverage our expert resources to glean as much information as would be required to cater to the unique needs of your employees. We look forward to fostering collaboration and continuing this conversation. Your employees deserve a secure future, and we are proud to be a vital player in ensuring that they retire happy and well. Welcome once again, ladies and gentlemen, as we anticipate an impactful and productive deliberations. Thank you very much, and over to you, Bumi.
Thank you so much, Olumide, for that lovely opening remark. Our Chief Executive has just set the tone for today's session. So it's time for us to sit back, relax, and enjoy the ride. So at this point, I am going to call on the Head of Business Development at Stanbic IBTC Pension Partners. His name is Kenneth Omelgu, and he'll be speaking to us about the journey so far, where we are coming from, where we are, and where we are going to. Ken, over to you.
All right. Thank you very much, Bumi. And then good morning, our esteemed clients and the representative of our different employers all over the country. Welcome again to this wonderful session, Employer Forum. Before I start, I would want to request that you key in your questions that you have for us in the Q&A segment. You see it on the platform. Once you have any question, comment, please go in and queue it in as we move along. Welcome again. So my job today is very simple. I'm going to be speaking to us on industry updates, different updates on the industry, the journey, pension journey so far, and then of course how we can partner with you, to resolve or provide seamless pension services to your employees, the employees in your organization. So let's look at the pension journey so far. So you agree with me that the Pension Act, the Contributory Pension Act, first was released in 2004 and then was reviewed June 2014. And then the amendments include the following. We started with a minimum contribution of 7.5 for both employer and employee, and that was increased to 8% and 10% for employee and employer respectively. Minimum participation based on number of staff per employee, was reduced from 5 to 3. So what it means is that if you have 3 employees in your organization, you are clear to participate in the contributory pension scheme. For the basis of computing monthly contribution, it was redefined to total emolument not lower than the sum of basic salary, housing, and then and transport allowance. Of course, when in the event of loss, when employees or contributors or RSA holders loses their job or out of job, they don't have to wait for 6 months. It was reduced from 6 months for 4 months for them to be able to access their benefits, and that these are for people who are below the age of 50 years. And then if you look at the membership from June 2014, at the time that the Act was reviewed, membership number grew from 6.19 million to 10 million subscribers as at 28 February 2023. And total pension asset under the fund is now 15.5 trillion naira within the same period. Let's just quickly move along to see some of the industry updates. Or maybe before we do that, the previous slide, please. Let's look at Stanbic IBTC's journey, Stanbic IBTC pension journey. So just to talk a little bit more about the company or the PFA that is speaking to you today, Stanbic IBTC Pension. The company was incorporated on the 19th of May 2004. Stanbic IBTC is a subsidiary. Pension is a subsidiary of Stanbic IBTC Holding, member of Standard Bank Group, with shareholder funds in excess of 68 billion naira unpaid by losses. And this is way above the minimum requirement by our regulators, which is 1 billion. So it shows that Stanbic IBTC is strong and solid, and we are available and ready to last the test of time, while providing pension services to your employees. We are the largest PFA by number of clients. Right now, it's over 2 million subscribers, and our assets under management as at 28 February. The last published results by Pencom is 5 trillion naira. Our company serves as administrator of approved scheme. That's other scheme outside the regular RSA 74 approved scheme, with a total assets under management of over 350 billion naira. And we have paid 15.2 billion to over 73,000 retirees. That's what we pay on a monthly basis. And in total, we have paid 1.32 trillion to retirees since inception. So we just thought it proper to speak to you about us. So let's just quickly move to some of the changes that have happened. Recent changes, not so recent, but we just thought to, use this opportunity to mention it to you, our valued clients and representatives of different of our clients across the country. In the industry, we have seen a lot of changes, and I'll start by speaking to the the verification exercise, which is now done online. That's for people in the public sectors, space, federal government, treasury funded ministry, departments and agency. This was reviewed on 1st of September 2021. Before then, it used to be a physical verification exercise where intending or prospective retirees will need to physically visit the different locations or regions to perform their verification exercise. But things has changed now. It's now done online, and then you can do it by yourself by visiting the Pencom website, or you can deal through your PDOs or through your PFAs. And if you come to us, definitely we'll be available to assist you. The next thing is that a non-interest RSA fund was introduced in 2021. And this is a Sharia compliant fund, more like an ethical fund, that offers viable alternative assets as against the conventional interest-based financial instrument that you are aware of. So these funds are invested in ethical instrument. The next thing in terms of industry updates as we move on. Next slide, please. As we move on, will be the revised regulation on the administration of retirement and terminal benefits, and this was introduced on 25th April 2022. And some of the few highlights that we thought to share here are as below. So the end block payment, there are changes there. So once an intending retiree, comes to us and we compute their monthly payment, pension payment, and it's observed that it is 1/3 minimum wage. That is 10K. What it means is that we will pay that intending retiree or prospective retiree their whole money as end block payment. In terms of arrears, the changes that were made as per the arrear payment for retirees, or prospective retirees. For those in private sector space, it was restricted to maximum of 6 months Then for those in public sector space, it's limited to the period between retirement and the date of remittance of accrued rights or outstanding contributions. And of course, pension enhancement was introduced where your pension, that's retirees and pension account, grow by 5%. So once the balance grows by 5%, there are provisions around enhancing the monthly pension payment. And the last, but not the least here, would be the pension back mortgage, which is one of the most recent changes or updates in the industry. So the National Pension Commission released this guideline to allow contributors to use part of their pension balances for equity payment for residential mortgage. And this is designed for ownership of residential homes and not for business homes or whatever, or commercial home, for residential home during their work life. And this is open to people who are in RSA Fund 1, 2, 3, or active in Fund 6, or even in the micro pension space. And then one interesting thing it offers is that married couples can merge their funds together and take balances, some of their balances, put it together to access a single residential mortgage. And that's really interesting when you're thinking of buying a bigger house or a more expensive house. That provision, we think, is it's actually a good one. So let's look at areas where we need your support. Of course, in terms of partnering with you, there are some few focus areas, and we believe that this pension services to your employees, would actually be worth looking at in terms of this partnership. And there are three areas where we have noted three focus areas. The first one is the RSA registration documentation process. So the revised guideline in June 2019 grants PFE 6 months moratorium period to obtain some documents, and the key one, letter of employment, and some other documents to complete KYC documentation for newly RSA registered employees. And what this means is that people that we registered after June 2019 would require to give us this document. So we have dedicated relationship managers assigned to your various organizations, and we want to crave your indulgence that once they come to you to request for some of these documents, just help us review and then see how we can provide this seamless service in terms of resolution of outstanding documents for your employees. We believe that one of our priorities is to ensure pension remittances, seamless pension remittances. And what we'll be doing with this session is to talk about the processes, how we can enhance the processes, how we can work together, and how we can demystify several pain points of uncredited contributions. And we want to work with you to solve those problems and put it to stop at your various organizations. So I would like to ask that once we get into the contribution process or contribution item in the agenda, please pay attention to it, and let's see how we can come to this and resolve the several issues, the burning issues together. Client engagement opportunities. Of course, we want to keep on prepping your employees. We want to keep on engaging them and walking them through their pension journeys, and there are different client engagement tools that we have planned to deploy at your various organizations, and some of them are Financial Fitness Academy, Retire Well session, pre-retirement seminar, our mobile office. We want to bring it to your organization physically to attend to several requests. So please, once our dedicated RMs to your organizations contact you, would like to create your indulgence to support them as much as you can. So here are our service channels, and I'll keep on saying that they are dedicated relationship managers assigned to you. And of course, if you don't know your dedicated relationship manager, you can go to the Q&A area and just help me note it, and then maybe we'll send you a direct message or to get your number so that we can link you up to your dedicated corporate relationship manager. Of course, the live chat is available for you to talk to any of our customer representatives. And I want to speak more on the mobile app, the Stanbic IBTC mobile app. This app is really interactive. Most of all the services that are being rendered at our various physical locations, you can find them in the app. I would like you to encourage your employees to download the app. With their Android phone, they can go to the Google Play Store and type Stanbic IBTC to download the app. With iOS, they can go to the App Store, type Stanbic IBTC, download the app, and you can reset your password, to start using it. You can also reach us through our website. Our multilingual contact center is available. The line is there 247, and of course our short code services. And then once you send help, you can start engaging. If you'd like to send emails to us, here is our email address, pensionsolution@stanbicibtc.com. I've mentioned the mobile office. We would like to deploy these mobile offices at your office location, so you can contact your relationship managers, and then we'll bring the office to your location. Then you can walk into any of our 200 branches nationwide to deal your related pension transaction. And of course, you can reach us via the various social media platforms. So this is where I stop, and thank you very much for listening to me. I'll be handing over to the MC, Bumi. Bumi, over to you, please. Thank you.
Thank you so much, Ken, for taking us through the pension journey so far and sort of the recent updates in the pension industry. I mean, I love the conversation about the RSA-backed mortgage and how you can have a joint application for you and your spouse, so you can combine both your balances to get that dream home that you've been looking at. Thank you very much for that, Ken. Ladies and gentlemen, once again, this is to remind us that the Q&A section is there for us to use. Please go to the Q&A section in the chat room and type in your questions, your comments, any sort of clarification that you need or assistance as to how we can serve you better. Please feel free to go there and post all the questions. I will be more than happy to answer them over the course of this morning. So now we are moving to the sort of money side of the conversation, and I'm going to call on Adetola Adewoye, the head of our contribution and collection department, and he's going to be explaining to us those things that we need to pay attention to when it comes to remitting pension contributions for our staff and the typical issues that cause delays and a bit of inconvenience when your account isn't credited on time. Tola, you're welcome. Over to you.
Thank you very much, Bumi, for the introduction, and good morning, our valued employers. Thank you for making our time for this session. I'll be speaking on contribution remittances and schedule management. It's an important aspect of the contributory pension scheme, and you would agree with me that the responsibility, the expectations of the Pension Reform Act on us as stakeholders is huge. If contributions are not well managed, of course, there is nothing to administer on the part of operators. There is no benefit to access and retirement for employees. So it's a vital part of the contributory pension scheme, and how we manage it determines the success of the scheme. Kenneth has provided some synopsis around our journey in the last about 2 decades working in this industry, and sessions like this provide us with an opportunity to observe, see how we have moved up, we have evolved over time, and areas that we can work on to continue to improve. I will start by talking about our responsibilities as stakeholders in this industry, and then I'll talk about the process of contribution management, how we can make it seamless, what are the challenges that we encounter from time to time, and how can we navigate through these challenges and deliver value to our clients. So looking at contribution management, we have 5 key players, key stakeholders. We have the employee, we have the employer, we have the pension fund custodian, we have the pension fund administrators, and we have our regulator, the National Pension Commission. Everyone has a clear responsibility to play to ensure the seamlessness of contribution management. For employees, they are expected to open a retirement savings account with the pension fund administrator of their choice and provide the details of their RSA to their employers. That details is what employers are expected to use to process contribution remittance on a monthly basis, and that is expected to be done within 7 working days after deduction from payroll. That's the place of remittance on the part of the employer. When that is done, of course, the remittance that is made and the corresponding schedule goes to the custodian. By regulation, they have the responsibility to receive your payment, receive the schedules, confirm those records, and then transmit to us, the pension fund administrator, to process and credit the relevant retirement savings account. And once that is done, our regulator gets a report that is reviewed on a monthly basis, looking at our level of compliance and how the industry is operating to the benefit of the contributors. Having said that, the flow of contribution is just in the manner that I've mentioned. It starts with the employee providing details, then going to the employer process remittances. And for me, I would just like to emphasize this. As far as the contributory pension scheme is concerned, employers are kings. You have a huge responsibility to play in terms of ensuring that remittances are done timely. It is a statutory obligation, and we all want to ensure that we are doing the right thing according to the law. Also, the custodian, just as I mentioned, will process PFAs, will ensure it is credited, and clients also get notified. A standard template for ensuring contribution remittances are processed properly is what I've just depicted here, which at all times should reflect the PFA that you're making remittance to on behalf of your employees. It should capture the period that the payments relates to. The details of the employees that are on the payroll that is receiving remittances are also meant to be captured uniquely. So surname, first name, and other names that are applicable to each of the employees, their RSA PIN. RSA PIN is very important. It is unique, and it's just like a bank account. So it is what uniquely identifies each of the employees, and it has to be provided on the remittance schedule. The contribution proportion of each of the employees also has to be provided. So what is the employee portion? By law, it is expected to be 8%. What is the employer portion of the remittance? By law, it's expected to be 10%. If there's any voluntary contribution, that also should be indicated on the schedule before you arrive at the total. And at every point in time, the total on the schedule should correspond with the total amount that has been paid for that to work and be processed seamlessly. So having said that, it's important that I also talk about what we stand to benefit when we do it right. As stakeholders within the industry, it is to ensure that the statutory responsibility that is placed on us is working, and is working to the benefit of contributors. I'm sure we all know the perception of the public around the old scheme. And when we do it right with the new scheme, with this Pension Reform Act that we've been running, of course, it will engender confidence. And to employees, they check their accounts, and we get calls, we get inquiries all the time. I've not seen my money for this month. Why has my employer not remitted, and all of that? And I will be speaking to some of the challenges because in some cases, employers have remitted money, but the schedule have not been provided. It is still not achieving the objective. Our ultimate goal is to make sure that when we remit, the money gets credited and get credited timely. So employees are looking out for that. And when they see that, they have confidence in the system. They are also happy that their employer is looking out for their interest. As employers, we want to ensure that we are aligning and complying with regulation. We don't want to be on the wrong side of the law. And it's important that we do that to avoid unnecessary extra costs. There are penalties to late remittance or non-remittance at all. That's not where we want our employers to be. As operators for PFA, PFCs, we collaborate and ensure that your contributions that are processed are remitted and credited timely. Where there are issues, that is when you see us coming back to you to seek for clarifications and all of that. But ultimately, the objective for us is to be able to deliver excellent services. And we can only do that with the right set of information. Lastly, our regulator, they are there to provide oversight. And when they do this right, and we are all playing our roles, of course, the industry is better for it. So that's important, and it's important just to shed more light on this so that we know what we stand to gain when we do what we are expected to do. In terms of contributions, some challenges that we've encountered over time, which I would plead that we all pay attention to at this point in time, has to do with discrepancies, issues of payment without schedules, issues of schedules that have been provided, but with one issue or the other because of maybe it's not complete or certain information were not provided. Those are the kind of challenges that we encounter as an industry. And we have a joint role to play to make sure that we get over these challenges, because if we can resolve all these issues proactively, the process of contribution management becomes more seamless. First, I mentioned the issue of payment without schedules. So we sometimes will get payment, it is paid on time, but the issue here is that the schedule that is used, that is expected to be used to credit that payment to the relevant RSAs are not provided. And that I'll be speaking to what we can do to prevent that. There's also the challenge of schedule with issues. So payments have been made, schedules have been provided, but there are discrepancies. For instance, payment is made for 100,000 naira, but a schedule of 110,000 in total is provided. There is no way we'll be able to marry the two and apply for crediting. There are also instances where the schedule is provided, but with incomplete information. Maybe period was not provided. So I made this remittance. What period does it relate to? It's important that we have that. So those are the things that we encounter and which results in uncredited contributions. There's also the issue of discrepancies in information provided. So the information is complete, but when you then validate, you realize that, oh, the PIN provided is not valid, or there is name mismatch. The name that is on the schedule is different from the name on our database. How can we prevent all these pitfalls? I'll be speaking to that. So looking at how we can navigate through these challenges. For issue of no schedule, one thing that we encourage employers to do is to adopt the use of collection platforms. One of such is EPCOS, Employee Pension Contribution Collection System. The benefit of using collection platforms is that it helps you to provide your payment evidence and contribution schedule simultaneously. And that helps us to pick it. That when I say us, I'm talking about the custodian and the PFA, to pick it up and process immediately. So this prevents the issue of, oh, we make transfer, we make payment, but the schedule, we are sending it or we are printing it, and then there's that lag. So schedules are not received, whether because they are still in transit or they are even not found. Sometimes that issue, and it happens so frequently, that we have to deal with issues of payment has been received, but we are still waiting to get the schedule from the employer. So we can avoid that by adopting collection platforms, which will enable us to provide the two simultaneously, and that can be credited timely. There's also the issue that I mentioned regarding discrepancies, whether it's name mismatch or invalid PIN. We can always ensure that we do those checks, and we encourage at all times that employees update their details when there are changes, because that's what even happen most times with name mismatch. People change their name, but they don't go back to update the employer, or they don't come back to update their PFAs that this is my new record. So when those remittances are made and the validation is done, there will be mismatch, and that will delay crediting of the relevant RSAs. For no PIN, web schedules are provided without PINs. I think the regulation takes care of that. Employers are empowered to request PFAs to open a nominal account for employees who are yet to open their RSA accounts. And that gives a window of 6 months within which such employees are expected to then go and open their valid RSA accounts. And once that is done, the contributions that have been remitted into the nominal account will be resolved into their validly opened RSA account. So that takes care of issue of, oh, the employee is here to open an RSA. How do we deal? Employers can take that action. We can also ensure that we validate or confirm the correctness of the RSA PIN. There is standard 15 character length across the industry. So anytime you are providing RSA PIN for your employees, please, it cannot be less than this character length, and it's unique by employee. So there are times we will see one PIN being used for multiple employees. It doesn't work that way. It is unique by employee. And one way we can ensure that we collect the accurate data that we use for processing is to ensure that when we are onboarding employees, we request for welcome letters, because that's in the situation where somebody is calling their RSA PIN verbally or writing it down, they can make mistakes. But when employees provide their welcome letters, you can see the details as provided by the pension fund administrators, and you can use that to update your database for correctness. So those are the ways that we can manage issues of uncredited contributions. We can navigate these issues, all of these issues that I've mentioned. And when we are making payments, please, even if there are different departments that are responsible for payments and schedules, please, let's always check that the department that is making payment, what is the amount? This schedule that we have generated from the payroll, what is the total? It has to tie for us to be able to process the payment and credit the relevant retirement savings account. So those are the challenges, and these are the ways or things that we can do to make sure that we navigate through and still achieve a seamless contribution management process. The option before us is one, because we've been partnering and we need to continue to improve on our partnership to make this process seamless. And what do we stand to gain by doing this? Accounts will be credited on time. That is the expectation of the Pension Reform Act, that within 24 hours, payments and schedules are received, accounts are credited. So when we do it right, accounts will be credited on time, can be invested, and our contributors who are your employees can retire well when the time comes. And like I said, on your part, you are complying with the statutory obligation that is placed on you, and doing it right prevents all sorts of back forth with regards to recovery and trying to ensure that things are done properly. On our part, we are committed to continuing to ensure excellent service delivery, and it is to that effect that we continue to collaborate and ensure that if there are any issues, work together to make sure those issues are resolved as quickly as possible. So our plea, and in my final comment, is to you employers. We want to continue to partner with you. Let's work together to improve this process, to make it seamless by addressing and tackling all these challenging areas that I have mentioned. We are committed to working with you 100% and making sure that when we do that, contribution process is seamless for the contributors. It is when we do that that we also can be confident that, yes, we are achieving the objective of the Pension Reform Act. So thank you very much for your time, for being part of this session and for listening to me. I hope this has been useful. We'll take all the questions and comments that you have at the appropriate time. I'll be adding over to Bumi at this time. Thank you very much. Bumi, over to you.
Thank you so much, Tola, for that session. I mean, as I was listening to you, I even took some notes myself. There's some things that even I had forgotten about. I'm like, that's very true, and I jotted it down. Thank you so much, Tola, and for our listeners and participants. I hope that you are paying rapt attention to the conversation that we just had about making your remittances, resolving issues that come up with those remittances, because we get these calls and inquiries so much of the time, I have not been credited. My employer is not remitting. I have not received an SMS, and so many other things. And people start to sort of worry and panic just because there has been a missing link or a gap in the process whereby there are no pins stated on the schedule. The amount on the schedule does not equate to the amount that was remitted, or payment was made and then the schedule wasn't sent on time. And we then have, we're now looking for money that isn't lost. So please, like Tola said and encouraged, please let us just follow these simple steps and processes to ensure that staff and our clients get their pension accounts credited on time. So everybody is happy and you don't have people coming and banging on your desk or your door with regards to their pension contributions. Thank you so much for that, Tola. Let us not forget, please put your questions in the Q&A section. We've seen questions coming in and our professionals behind the scenes are answering those questions. Please keep those questions coming, keep them coming, and we'll keep providing the answers. And like I said, there's a Q&A section at the end where any question that we've not addressed in the Q&A, we will speak to them live during the session. So now we're going to take a short break just for us to take in everything that we have spoken to this morning. And while we're doing that, we'll leave you with this short jingle. Bye for now.
Sorry, wait, excuse me, sir. I'm looking for number 2 Johnson Street.
Oh, Johnson Street.
Yes.
That's quite simple.
Oh, okay.
Now you just go straight on longitude 155, longitude 155. Now take a 360-degree turn and turn left. Then turn right on latitude 379. Are you following? Face the south. Face the south and transverse the trajectory. At that point, you would notice a newly old turning. Take the sharp turn, and at that turn at angle 90, and boom, you are in Johnson Street. You can't miss it.
At Stanbic IBTC Pension Managers, we believe the journey ahead should be simple. Let our experienced managers support you. Switch to Stanbic IBTC Pension Managers today. Stanbic IBTC Pension Managers, a member of Standard Bank Group.
Set up.
Welcome back to today's session, Employer Forum 2023. And the theme for this year's session is pension mastery, because we want you to be a master of your pensions going forward. So, hope we've taken in the first couple of sessions. Now we're moving to the second half, and we will be speaking to a very important aspect of the pension space, which is benefit payments, aka how do I get my money? Now, this is a question that we get asked 1,000,001 times on a daily basis, and it's important that we equip you with the information and the knowledge to be able to address some of these questions, sort of frontline, and keep allay their fears or whatever concerns that they may have, because people are now getting worried that their pension money will disappear. Don't worry, your pension is not going anywhere. So now I'm going to hand you over to Benedict Nweke-Wosu, who is the head of Benefit Administration and Shared Services at Stanbic IBTC Pension. Benedict, over to you.
Thank you so much, Bumi. Good morning, everyone. Good morning, our partners. So under this section, I would be unpacking three major things. The first one would be, what are those things that we are expected to do prior to retirement? What are we expected to do at retirement? And in unpacking these two items, I would be emphasizing on those necessary things that can ensure that the retirement journey is seamless. So, what are the things that we are expected to do prior to retirement? First, it is important for us to note that our information must be updated. It is important for us to update our information on our pension accounts. Now, there is an industry exercise that you can take advantage of in doing this, and that is called the data recapture exercise. This is a prerequisite to accessing your benefits. Then the second item is documentation. What are those relevant documentation that we need to have to ensure that in accessing our benefits, it is seamless, it is straightforward, and it is easy? The details of the different documentation I would unpack as we proceed. Another very important thing is employee clearance, and this pertains to specific private sector organizations as well as public sector. It is important that we ensure that at retirement, the necessary clearance, the necessary offboarding is carried out, not after the ex-employee has left the organization. It's important that all of this is duly concluded prior or at the time of the employee exiting the organization or parastatal, as it were. Last but not the least, and this speaks specifically to federal government employees, is the retiree verification exercise. Now, this is expected to be carried out 1 year prior to retirement. Very, very important. We would also unpack the necessary steps that are to be taken when carrying out the verification exercise. Now, for the online verification exercise, it all starts with the ministry, department, agency, parastatal uploading the information of the prospective retirees onto the online enrollment platform that has been made available by the National Pension Commission. Thereafter, the prospective retiree is expected to carry out what we call self-registration on the portal, where the client will be expected to input basic information, both employment information and personal information onto the portal. It is important to note that a prerequisite to doing this is the successful data recapture exercise. So it all starts again, like I had mentioned, with ensuring that the information we have on your pension records is consistent with the information that you have on your employment, your employer's database, as well as on the database of the National Identity Management Commission. It is extremely important, and this cannot be overemphasized. However, we do take into cognizance that some of our prospective retirees, or retirees as it were, may be unable to carry out the self-registration or would require assistance. Not to worry, that assistance is available at any of our locations. So as your PFA of choice, we can assist the prospective retiree or retiree in doing the registration. The next step would be verification. Verification is the responsibility of the PFA, of your PFA, and this would entail corresponding or reviewing the information as provided by the client against the supporting documentation submitted or provided. And once it is in sync and correct as well as complete, then the enrollment would be deemed successful and forwarded to the National Pension Commission for their further action. It is very important to note at this point that this exercise is extremely critical in ensuring the prompt computation and remittance of your retirement benefits into your RSA. So a lot of complaints from retirees as to not having the ability to access their pension benefits on time starts with them either not completing or missing out on carrying out this very important exercise. Now, what are the different ways through which we can access our retirement savings account? Yes, we have contributed, like my colleague Tola had mentioned, and at retirement, it's important that our benefits are made available to us as at when due. However, it is paramount for us to equip ourselves and our employees on the different ways of accessing the retirement savings account. At retirement, there are 3 principal ways of accessing your retirement savings account. First is the lump sum and program withdrawal. You have lump sum and annuity and en bloc in no particular order of importance. For lump sum and program withdrawal, under this withdrawal mode, the retiree is allowed to access a portion of his RSA as a lump sum payment, usually between 25 to 50% of the RSA, and the balance thereof is programmed to fund his pension on either a monthly or on a quarterly basis. For lump sum and annuity, the retiree is also provided a lump sum between 25 and 50%, and the balance thereof is used as premium to procure an annuity plan with an insurance company of the client's choice. For individuals with RSA balances less than 550,000 naira at retirement, the provisions of the guideline allows for the entire sum to be paid en bloc, or as Ken had rightly pointed out, if the computed pension is less than 1/3 of the prevalent minimum wage, you are allowed to be paid the entire RSA balance as en bloc payment. We would look into what drives the computation of benefits as we proceed along. Now, the regulation is also not out of touch with reality. So there is provision for us or for the RSA to be accessed once in the occasion of a temporary loss of a job. So if you are out of job for a minimum period of 4 months and still employed at the time, you can apply to access 25% of your RSA balance. It is very important to note that this is a one-off access to your retirement savings account, and it has been advised to our customers, to our clients, that it should be taken advantage of where there is need to do so, because it is one-off. Then, of course, what happens in the very unfortunate event of the RSA holder passing on? There is provision within the law, within the scheme, for your RSA balance to be accessible by your legal administrators, not your next of kin. And what makes one a legal administrator is the letter of administration issued by a court of competent jurisdiction, or a duly executed will admitted to probate. Now, we also have provisions within the law to make voluntary contributions into our RSAs. So where those voluntary contributions were made, how do we access them? Now, those contributions can be accessed while in active service and also at retirement. In active service, you can access 50% of the contributions plus accrued interest on those contributions that have been retained in the RSA for a minimum period of 2 years. This access is restricted to once every 2 years. Now, what happens to the balance? The remaining 50% is then used, or would be used, to augment your RSA at the point of retirement. This is to ensure one critical thing, and that is a robust retirement package at that time. It is also important to underscore that there is a tax implication or burden on accrued interest on these contributions, and where the contributions have been retained in the account for a period above 5 years, it is tax exempt. For individuals that may have retired and re-engaged on a contract basis or a short-term basis, they are allowed within the rules of the scheme to make voluntary contributions as well. In this instance, the total value of the voluntary contributions can be accessed, but that would be at the expiration of the contract. Moving on, it is important at this point to draw some key highlights between the two major modes of accessing retirement savings account, that is program withdrawal and annuity. This is born out of a lot of inquiries that we would get from our esteemed customers as to questions around which is better, which do I go for. And it is to guide that both modes of withdrawal are sufficient and satisfactory. Both are means to a safe and robust retirement. Two doors to the same end, as it were. Now, what are the key differences between these two modes of withdrawal, which in essence is to give the retiree a choice? For program withdrawal, it is administered by the PFA, the Pension Fund Administrator, whereas the annuity plan is administered by a licensed insurance provider. For program withdrawal, the payments are done for an expected lifespan as computed by the standard template, which we will get to. For annuity, it is for life with a guaranteed period of 10 years. Now, the rules of scheme also provides that one can move from program withdrawal to annuity, provided you have been on program withdrawal for a minimum of 1 year. However, you cannot opt out of annuity back to program withdrawal, though there is provision for you to switch insurance providers within the guidelines. So it's important for us to educate ourselves as well as our clients in making a decision. It's important that it is not taken lightly, because once you opt out of program withdrawal, you can make the switch back. The regulators under these two different plans are different. The program withdrawal that is administered by PFA is regulated by the National Pension Commission, whilst the annuity plan that is administered by a licensed insurance company is regulated by the National Insurance Commission, NICOM. Another very important distinction between the two is program withdrawal offers what we call pension enhancement that is done approximately every 3 years at the discretion of the National Pension Commission. Now, what pension enhancement simply is taking into cognizance the growth on your RSA. There is a recomputation that is done on your monthly pension payment that leads to an upward review of what you get on a monthly basis. That is not provided for under the annuity plan. So in terms of the computation of retirement benefits, what are those key things that we require? And what is the objective behind the computation that is being done? Just to give us a basic understanding as to how the computation of benefits work. Now, it's important, first and foremost, in terms of documentation, things that are required. Your payslip and why. Your payslip for the period, for the 3 months prior to your retirement or exit is required. Why? For the essential purpose of getting your last remuneration. And I would get into why that is important as well. Your retirement letter. Your retirement letter is important because that gives a date to your retirement. So with your retirement date, we are able to compute what your age is at retirement. And that is also why evidence of date of birth is equally important. That could either be an age declaration at a court of competent jurisdiction or a birth certificate issued by the requisite authority to do so, and your letter of employment. So we are able to ascribe, length of service, date of first employment, and all of that. Now, looking at the calculator proper, what does the pension calculator seek to achieve? The pension calculator seeks to achieve, rather, to minimize a change in the lifestyle of an individual at retirement. So it would give you a minimum lump sum of 25%. Recall I had said that this can float between 25 to 50, depending on the other factors. Other factors such as your RSA balance. So the more you're able to accrue as your RSA balance, the more you contribute, and that is why voluntary contributions are very important. The more you have, the more you're able to get at retirement. So your RSA balance is a very important driving force in terms of your computed benefits. What was your last salary? What it tries to achieve is to give you a minimum, or try to get at least 50% of what you were earning while in active service. So it will try to give you a minimum lump sum of 25% and also try to give 50% of what you were earning at time of retirement. And that is why the payslip is important to evidence what your final salary is. That is why your retirement letter and letter of employment is important, so that we can ascribe, or we can get your age at retirement. All of these are very important in the computation of your benefits. So that is just to demystify what the pension calculator seeks to achieve and what actually drives it. Now we will move on to what are those documentation. Remember that one of the very important things I've mentioned in preparing for retirement is getting your documents together. Getting your documents together. Now, what are those documents that are essential for you to ensure that you have? Now, you must have evidence of date of birth. It is very important that you have that. If you do not have a birth certificate issued by the requisite authority, then you can do an age declaration in a court of competent jurisdiction. It is important to underscore that your date of birth must be consistent. It is a very crucial and important factor or input information about an RSA holder. So it must be consistent on the records of the employer, on the pension records, as well as on the records of the National Identity Management Commission. So one very important thing that we need to keep telling our employees, telling our customers, our clients, is to ensure consistency of their information across board. Your retirement letter or exit letter is also very important. Your payslip within the last 3 months prior to retirement or prior to exit is also very, very important. Letters of promotion, also very important, and that is required especially for public sector employees and ex-employees, because it's one of the requirements in the computation of your accrued benefits. Where applicable, clearance letters, especially from either state or public parastatals, is very important. It's a very important document to ensure that you obtain before retirement or at retirement. Letters of administration, now this speaks to the beneficiaries of deceased RSA holders. And for the purpose of withdrawing your voluntary contributions, you would be required to execute a tax deduction consent. Like I had mentioned earlier, there are tax implications on the withdrawal of voluntary contributions. So a consent to making sure that the withdrawal is in line with the law is also required. A valid means of identification is a basic requirement, and of course we would require your bank account information, bank account date, so that remittances, or rather payments, can be disbursed to your preferred account. Now, one of the very recent and quite important developments within the pension industry, as Ken had earlier mentioned, is the guideline or the provision to access a portion of your retirement savings account for the purpose of equity contribution towards a residential mortgage. So it is very important that we speak to what are the rules of general application and eligibility, so that we can advise our employees, to take advantage of this very, very crucial and important provision within the scheme. The first thing we must note is that you have to be an active contributor. So it is not open to retirees and to individuals that have less than 3 years to retire. The provisions of this guideline is not open to those category of RSA holders. So you must be active. You must have made contributions for a minimum period of 5 years. Statutory mandatory contributions for a minimum period of 5 years at the minimum. Now, it also provides for joint applications, so couples can apply jointly, married couples. So in such instances, we would require evidence of marriage as it were. One good thing about this provision as for pension mortgage is that you can use your part of your voluntary contributions that you're eligible to access, eligible to withdraw, to augment the value that you can get. So it says you can access not more than 25% of your RSA balance to, towards contributing, towards making your equity contributions, right? Now, if that is not sufficient, you can also desire to, withdraw the portion of your voluntary contributions that you're eligible to access. So you can use that, to add up, to augment. Same applies to the pre-act contributions within your RSA. So these can also be used, to add up to the value that you can withdraw from your RSA. Now, the process requires documentation, but is actually quite seamless. So it starts with getting an offer letter from the property owner or developer, as it were. Now, taking that property offer letter to a licensed mortgage provider and indicate interest that you would want to access a portion of your RSA, to contribute towards your to make towards your equity contributions. Approach your PFA for an endorsed statement, endorsed RSA statement. And in our promise to make the process seamless, we have a dedicated team as well as a dedicated email address where these requests can be made to. And that email address is pensionmortgage@stanbicibtc.com. And you can as well visit any of our locations or send an email to Pension Solution for basic inquiries. But again, just to make the process very seamless, we have created a dedicated email to attend to this. Now, in wrapping up, it is important to talk about what are those common nuances in the withdrawal process. What can cause a delay in us receiving our pension benefits as at when due? One of those critical things is not having the appropriate documentation, not having consistent information. Where the information on your employer's database of records is inconsistent with what exists or the documentations that you have, then that becomes a problem. In resolving that, it then takes time and further delays your access to your benefits. So we have highlighted a very simple case study where a client who had worked with a federal parastatal had not carried out the pre-retirement exercise prior to retirement. So at retirement or after retirement, she approaches her PFA to access her RSA balance, and of course was unable to do that because the government was yet to remit her accrued retirement benefits. So again, it's important to underscore the need for us in ensuring that we have a smooth, seamless journey at retirement to start before retirement and plan for retirement as it should be. As always, and as your trusted pension fund administrator, we are available 24/7 through all different touch points to give assistance where required. Thank you so much. And over to you, Bumi.
Thank you so much, Benedict, for that lovely presentation. I hope we're all paying attention and listening very, very closely to all what he said about putting your documentations together, making sure you complete your offboarding process with your employers as you're approaching retirement. Don't wait till after you leave, because then it might be more difficult to get access to people and to information. So please, let's make sure that before we retire, all our documents, we put them together. Promotion letters, anything that pay slip, anything that has to do with our time at our places of employment. So now we're going to move very quickly to the question and answer session, which is where we have so many questions we need to get through. Some have already been answered on the chat room, but we will answer a few directly over this session this morning. So now I'm going to call on our head of business development, Ken, to answer some of these questions. So Ken, some questions that we have here regarding the RSA-backed mortgage. I'll just fill them out for you. One question says, I am also interested to know more on the mortgage option mentioned here. Another question says, how can one access the pension-backed mortgage facility? Another question says, good morning, everyone. My question is under the mortgage combination for spouse. The situation where both spouses are not using the same PFA. Does this combination still apply, or is it only applicable to Stanbic IBTC contributors alone? So, and then, yes, so these are the questions on RSA-backed mortgage that I can just quickly answer for our esteemed clients. Over to you, Ken.
All right, thank you very much, Bumi. And for the sake of time, I would want to quickly address the questions. I'll be a little bit fast, and I think the session ends in the next 15 minutes. So in answering this question, how can you access the pension-backed mortgage? I think there are steps that are already designed for it. And the first the first step is for you to engage the property seller for an offer letter, and then get an endorsed RSA statement from your PFA, and then once you get those documents, you need to approach a mortgage lender, of course. And if you want to do that, we can in a way assist you, to guide you on how to go about it. And of course, once you approach the mortgage lender with the offer letter and the endorsed statement, what you need to do is also to deal all the different processes with the mortgage lender, and then the mortgage lender will issue you a mortgage offer letter. And then once you receive it, you can send it to us, or you can even send us soft copy to pensionmortgage@stanbicibtc.com. pensionmortgage@stanbicibtc.com. Of course, we will process your PFA, check the documents and see that it meets the requirements. Process to our regulators for approval. Once we get approval from our regulators, the mortgage lender will provide original supporting documents, for us, the PFA, to disperse the cash to them. So the cash is not going to you as the applicant, it's going to the mortgage lender. And of course, once we deal with that, we'll notify you, our RSA holder. But what we promise to do is that at every step of the way, and where we require your input on any requirements, we'll definitely contact you and engage you further. To respond to the spousal application, where the husband and the wife are at different PFAs, what will happen? And of course, the question is key and is a very good question. So what will apply here? What will apply here is that both the husband and wife will need to apply at their different PFAs. Of course, get all your documentation that I've stated earlier. Apply at your different PFAs, and then your PFAs will process straight to the regulators, to our regulator, National Pencom Commission, for approvals. And once the approvals are received, the payments will still come, to to the primary mortgage lender that both of you are applying with. So that's to answer that question. I don't know if there are other questions for me, Bumi, but over to you. Thank you.
Yes. While we still have you, Kenneth, just to quickly throw in this one, and it speaks to the Sharia fund, because we have a few questions there, so we'd like to just touch on it very quickly. The questions are, how does the non-interest fund work? How does the Sharia fund work? Can you please throw more light on this fund 6, and how can I change to it if need be? Thank you.
Okay, so like I said before, I recall mentioning that if you had followed us through the process of multi-fund structure, you notice that several funds were created in addition to the RSA fund, that's the Retirement Savings Account Fund. So Sharia Fund is one of the newest babies in the house. So like I said, is a non-interest fund that is dealt based on the guideline from National Pension Commission. So there's a part for the active client and then a part of it for the retirees. So what do I mean? If you're in active service, you can also be in the what's it called, Sharia compliant fund, and then as a retiree you can also be part of the fund. So just to explain the way it's invested, if maximum of 25% is on variable income, while 75% on fixed income for those in active service, and then for the retirees, the variable income of those funds are is the maximum of 5%, and then fixed income is 95%. So if you are interested in moving, how does it work? You will need to apply for a multi-fund transfer with us. Of course, you can do that through our service channel. You can do it from our pension solution pension portal, or you can even send us an email, once you complete the multi-fund transfer. And then if you'd like to visit our office for it, fine. But we advise that if you're tech savvy and then you have all the digital platform, you can apply for it, and then you'll be transferred to the fund. So it's part of, is a fund that is part of the RSA fund, but it's invested on ethical instruments. Thank you. Over to you, Bumi.
Thank you. Thank you so much for that, Ken. And like he said, the Sharia compliant fund is the one that follows the guidelines and rules of that particular faith in terms of what they can invest in. Great. Thank you so much. Now I'm going to call on Tola to answer some questions that have sort of come with regards to pension remittances and the like. So Tola, if you could please join us. Some of the questions that have been asked are, what happens to uncredited pensions if no schedule is provided? As at the time that remittances are made by the employer, how do you use the EPCOS platform for remittance? What is the process of contributing using the nominal account for employees without a PIN? Another question had to do with how can you make remittances? Okay, yes, I have it. It said, is there a way I can make pension remittances directly from my desk without having to issue checks and physically visit different banks to make pension payments? If yes, how can I receive assistance? And so basically he wants to know how they can remit without physically going to banks and carrying checks and all that. So Tola, over to you.
Thank you very much, Bumi. So, and I think that last question is linked to one of the earlier three that you mentioned with regards to use of EPCOS. I mentioned that during the presentation that we encourage use of the collection platforms to process contributions because of the seamlessness and the effectiveness of using such platforms. EPCOS, how can we make use of EPCOS? EPCOS is a service provided by NIPS, and they have a tutorial video on their website, NIPS website. Please, you can visit that website watch the video. It will show you how that process works. It's very seamless. And on that website, employers can also register. So you don't have to go to anywhere. You can do it from your desk, register your business on that platform for EPCOS, and then watch the video, which takes you step by step through how you can make use of that application. We also have our RMs, and they can also provide support to you. I like the fact that this session is eliciting such interest, and that is where we want our employers to operate. The other question with regards to uncredited contributions, that what happens to it? I think that's also one of the major issues that I've talked about. It is not invested. So it is not in anybody's interest to have payments without schedules or payments that cannot be credited into RSAs. It is suboptimal, and it's not in the interest of contributors. And that's why it's a major challenge for us as an industry. So we want to work with you to make sure that whenever we're doing remittances, let's do it right. Let's do it such a way that accounts can be credited and those funds can begin to accrue appropriate investment returns. I think I've taken all the three. Right, Bumi?
Thank you very much for that, Tola. And yes,
okay, there's one last one that I've not taken, just remembered, with regards to nominal account. So for nominal accounts, employers can request for nominal accounts to be opened. Basically, your request, form a letter to us, attaching the means of ID of the employee, attaching the proof of address, and an employment letter of the employee. So we can use that with those additional support documents to open the nominal account. And within 6 months, the employee is expected to regularize, open a valid RSA for subsequent remittances to be processed. Thank you.
Thank you very much for answering those questions, Tola. And just to reiterate what Tola said to all our listeners, that it is not in the interest of the contributor when pension remittances are made and their accounts are not credited because either a schedule was not provided or incorrect or incomplete data were also provided. No PIN, no name, no period stated, or duplicate periods. So these are some of the issues that causes delays. And at the end of the day, it's the contributor who sort of bears the short end of the stick, because like Tola said, that money isn't invested. It's not getting the interest that it would have been earning if it was properly credited at the time remittance were made. Wow. Fantastic. Thank you so much for that, Tola. Just going through a few more questions as we approach the end of today's session. So I have one question here that says, is it compulsory for an exited employee of 20 years ago who must have lost his or employment letter or termination resignation letter to still produce it before he or she can claim a refund of his or her money, and whereby the company in question has folded up or is no longer in existence, or the management has changed from old to new, and the new set has no document of such an employee again? What is the way forward? Wow, this is a very loaded question. So Benedict, I will call you up for this question. And I think to sort of put it together is to say that in a situation whereby an applicant, somebody who has retired, is unable to get some of these documents, like maybe exit letter from the company, or the company has closed down and you cannot really sort of trace them again, or they've left the country. In this kind of situation, what can the applicant do so that they can still apply and get paid their pension benefits at the point of retirement? Benedict, you want to just quickly help us with that?
Yes, Bumi. All right. So in all right, I would again work with your summary of the question, because the reference to 20 years ago, again, just to point out that the current scheme, as it were, hasn't been on for up to 20 years. So I would want to question where those contributions may be coming from. But be it as it may, in an instant where the employer has folded up or no longer exists, we would require, and the RSA holder doesn't have an exit letter or wasn't issued one, and the company is no longer in existence. Now, what we would require for the RSA holder to do is to depose that accession, by way of an affidavit for non-issuance or affidavit for loss of exit letter. That affidavit would also capture the basic information that elsewise should have been stated on the exit letter, and also state that that employer is no longer in existence. We would carry out our independent confirmation to that fact, and where it's confirmed, we would proceed with the application, so that where you have lost evidence of exit doesn't mean that there is no provision or no means to access your benefits. But of course, we would require supporting documents to that fact, as well as do our confirmations as well, and then proceed with the request. Just in summary. Did I answer the question, Bumi? Was there anything else?
No, that was it. Just to let our contributors and our clients know that whenever there is a challenge with a missing document or a document is not available, please feel free to approach us, have a conversation with us as to what other substitute documents can be put forward. And like Benedict just said, in some cases, it will be to provide an affidavit that will just give us that go ahead, which will then submit to the National Pension Commission as evidence that that thing that you are stating has indeed happened or crystallized, so that your application will still be processed and approved subsequently. So as we start to wrap up today's session, there's one last sort of question I would like to quickly address. Let me just see, go through it, can find it. Aha, it says, can one switch to voluntary contribution if you are relocating from Nigeria? Okay, so I guess this is someone that is either planning to japa or has already jackpot, as the case may be. So for voluntary contributions, it is not a function of whether you are relocating or not relocating. It is a function of making your regular remittances along with your mandatory. So if you are employed and in active service, you'll be remitting both your employee portion and the employer will remit their own portion. And then you can opt to make additional contributions from your salary, which is where the voluntary contribution comes in, to say that, you know what, this minimum 8% that is being taken from my salary, I want to do a bit more. And then you will state that amount that you want to add to your employer, and then that deduction will be made from your salary. So if you are relocating, that suggests that you will not be in active employment with that employer anymore. Or if that is not the case, and that you are relocating and sort of still working remotely in the abroad, as they say, then as long as they're making your pension remittance, then you can still make your voluntary contributions. But the moment you stop working with an employer, you cannot remit from your own bank account into either your mandatory pension account or your voluntary contribution account. So I hope that answers that question. So now it is to say a very big thank you for paying attention up until this point. We have spoken a lot and mentioned so many different things and, giving you useful nuggets. Now I'm going to call on our Executive Director of Business Development at Stanbic IBTC Pension Managers, Nike Bajimo, to give us the closing remark. Nike, over to you.
And good afternoon, everyone. I hope we've had a good session, and I believe it was very useful. So I think I'll just go do the honors and go straight to my closing remarks. So I'll say good morning, everyone, and thank you once again for taking the time to be a part of our virtual employer forum. I believe we have all had a very rewarding morning. I am confident that the session was informative and you got some nuggets on how to support your colleagues, our clients, on their individual journeys to retire well. On behalf of the board, management and staff of Stanbic IBTC Pension Managers Limited, we thank each and every one of you very much for honoring our invitation. Your passion, demonstrated by the quality of questions and comments that came through, assured us that we are definitely on the right track with the right partners. We trust that you will honor us again whenever we call. Once again, thank you very much for your time. Do enjoy the rest of your day. Over to you, Olubomi.
Thank you so much, Nika, for that wonderful closing remark. Very short, brief, and concise. Thank you so much for your time. And for all our guests, for all our clients, our employers who have joined today's session, we cannot say thank you enough. We know that you are busy and there are so many demands of your time, but that you have deemed it worthy to engage us in this past hour and a half. I mean, the time sort of flew by from when we started. We talked about so many things that we believe will be very useful to you personally and also your employees, so that when they come to you asking different questions, you're already a pension master because you have all the answers and you can, share your wealth of knowledge with them, just to let them know that all is well. And at Stanbic IBTC, we always, our sort of reason for existence is to make sure that our clients retire well. That is why we work tirelessly every day and night to serve our customers so that they would have the best retirement possible when that time comes. And yes, retirement is not as far away as we think it is, which is why we always advise start planning for your retirement way before you get there, and not when it's 2 years, 1 year, or even 5 years away. Start planning as far away as possible that you can. So from all of us at Stanbic is to say thank you once again. Please keep the questions coming. The Q&A section is still open. We'll leave it open for a while. Please post your questions there. We'll still keep answering those questions as they come in. We have a dedicated team of professionals back end who have been addressing those questions. So please keep them coming. And this is me signing out to say thank you once again for joining us. It has been my pleasure being your host for today's Employer Forum 2023 virtual session. And this is to wish you a fantastic day ahead, and hope to see you soon. We have numerous events that we host, per time. Please honor our invitations whenever we call you to join us for these sessions. Now, just before I go, there's going to be a quick link that will be pasted in the Q&A section. Yes, and that link will be just a short survey so that we can get feedback from you as to the session that you have just been part of and participated in. Just to let us get your thoughts, your feedback, so that we can improve on it and do a better job next time. So please go to the Q&A section. Just go there and click on it and just fill out your feedback very quickly. It will not take you up to a minute to complete, just so that we have that feedback. As they say, feedback is a gift, and we love to hear from you. So this is me signing out to say thank you, have a wonderful day, and see you soon. Bye-bye.
Our online portal is available to you to view your RSA balance, update your biodata, request a letter to the embassy, check your application status, and so much more. You can log on to your account using the steps below. Go to your web browser and visit www.stanbicibtcpension.com. Then log in. At the top right-hand corner of the homepage, you will see the Sign into your account tab. Hover on it, then click the option on the drop-down which says My Pension Portal. This will take you to our secure web server to log on to your RSA account. Next, enter your RSA PIN. For example, pen your RSA number or your registered email address or mobile number and passcode. Then click Login. If you don't remember your RSA PIN, simply text My PIN to 30388. If you do not have or remember your passcode, simply click on Forgot Password under the Login button. A new password will be generated and sent to your registered email address and mobile number. Finally, please remember to change your passcode after your first login attempt. You can change it to any 6 digits of your choice. You are also advised to keep your passcode safe. With My Pension Portal, you have your own pension branch in your hands. No transit, no queues, and no long wait times. Try it today and experience a life of ease.
No internet? No worries! Try out Stanbic IBTC Pension Managers short code service today. It's as easy as 30388. With this code, you can access information on your pension account by initiating a request from your registered mobile number. Here are a few ways you can use the 30388 code. Text PIN to 30388 to get your RSA PIN. Text balance to 30388 to know your RSA balance. Text contribution to 30388 to know the last contribution remitted by your employer. Text PRC to 30388 to get your pension registration certificate delivered to your registered email address. Text statement to 30388 to get your statement delivered to your registered email address. Text HELP to 30388 for more. Life is easy when you know the code. Use 30388 and experience a life of ease.
Sorry, wait, excuse me, sir. I'm looking for number 2 Johnson Street.
Oh, Johnson Street.
Yes.
That's quite simple.
Oh, okay.
Now you just go straight on longitude 155, longitude 155. Now take a 360-degree turn and turn left. Then turn right on latitude 379. Are you following? Face the south. Face the south and transverse the trajectory. At that point, you would notice a newly old turning. Take the sharp turn, and at that turn at angle 90, and boom, you are in Johnson Street. You can't miss it.
At Stanbic IBTC Pension Managers, we believe the journey ahead should be simple. Let our experienced managers support you. Switch to Stanbic IBTC Pension Managers today. Stanbic IBTC Pension Managers, a member of Standard Bank Group.
Set I want.
Stanbic IBTC gang.
Set I want.
Okay, happen to life gang.
Set I want.
Set I want your pension of Lagos. You know me, who gang? You are moving to the switch gang. It can be with the switch gang. Right now you are moving to the switch gang. This gang is the switch gang. Switch now, make you check calm. Your pension go sure, make I no lie. Cut and pick IBTC if you want try. Transfer with the short, so no door. How you go come no if you no try? No confirm account with the no sign. Pension manager we go show you that. Set I want gang. Retire well gang. Pension secure gang. Just switch gang. Set I want Stanbic IBTC gang. Transfer window gang. Happen to life gang. One pension manager gang. Join the switch gang today.
Stanbic IBTC Pension Managers, a member of Standard Bank Group.
How do you navigate your Stanbic IBTC mobile app? First things first, if you haven't downloaded the app, you should immediately open your Google Play or Apple Store, search for the keyword Stanbic IBTC, then click on download. It's that simple. Once you've opened the app, click on pension, then input your RSA PIN and passcode. This same password applies on the mobile app and on our website, www.stambicibtcpension.com. If you can't remember your passcode, simply click on Forgot Password under the login button, and a new password will be generated and sent to your registered email address and mobile number. Please make sure you change your passcode to 6 digits for subsequent use. Your RSA PIN can be retrieved by texting MyPIN to 30388 from your registered mobile number. The mobile app can be used to view your RSA balance, generate your RSA statements and registration certificates, request a letter to the embassy, download your loyalty card, and so much more. Download the mobile app today for quick and convenient access to your pension services. Our online portal is available to you to view your RSA balance, update your bio data, request a letter to the embassy, check your application status, and so much more. You can log on to your account using the steps below. Go to your web browser and visit www.stambicibtcpension.com. Then log in. At the top right-hand corner of the homepage, you will see the Sign into your account tab. Hover on it, then click the option on the drop-down which says My Pension Portal. This will take you to our secure web server to log on to your RSA account. Next, enter your RSA PIN. For example, pen your RSA number or your registered email address or mobile number and passcode. Then click Login. If you don't remember your RSA PIN, simply text MyPIN to 30388. If you do not have or remember your passcode, simply click on Forgot Password under the Login button. A new password will be generated and sent to your registered email address and mobile number. Finally, please remember to change your passcode after your first login attempt. You can change it to any 6 digits of your choice. You are also advised to keep your passcode safe. With My Pension Portal, you have your own pension branch in your hands. No transit, no queues, and no long wait times. Try it today and experience a life of ease.
No internet? No worries. Try out Stanbic IBTC Pension Managers short code service today. It's as easy as 30388. With this code, you can access information on your pension account by initiating a request from your registered mobile number. Here are a few ways you can use the 30388 code. Text PIN to 30388 to get your RSA PIN. Text balance to 30388 to know your RSA balance. Text contribution to 30388 to know the last contribution remitted by your employer. Text PRC to 30388 to get your pension registration certificate delivered to your registered email address. Text statement to 30388 to get your statement delivered to your registered email address. Text HELP to 30388 for more. Life is easy when you know the code. Use 30388 and experience a life of ease.
wait, excuse me, sir. I'm looking for number 2 Johnson Street.
Oh, Johnson Street.
Yes.
That's quite simple.
Oh, okay.
Now you just go straight on longitude 155, longitude 155. Now take a 360-degree turn and turn left. Then turn right on latitude 379. Are you following? Face the south. Face the south and transverse the trajectory. At that point, you would notice a newly old turning. Take the sharp turn, and at that turn at angle 90, and boom, you are in Johnson Street. You can't miss it.
At Stanbic IBTC Pension Managers, we believe the journey ahead should be simple. Let our experienced managers support you. Switch to Stanbic IBTC Pension Managers today. Stanbic IBTC Pension Managers, a member of Standard Bank Group.
Set I want.
Stanbic IBTC gang.
Set I want.
Okay, happen to life gang.
Set I want.
Set I want your pension of Lagos. You know me, who gang? You are moving to the switch gang. It can be with the switch gang. Right now you are moving to the switch gang. This gang is the switch gang. Switch now, make you check calm. Your pension go sure, make I no lie. Call Stanbic IBTC if you want try. Transfer with the short, so no door. How you go call no if you no try? Look confirm account with no sign. Pension manager we go show you that. Set I want gang. Retire well gang. Pension secure gang. Just switch gang. Set I want Stanbic IBTC gang. Transfer window gang. Happen to life gang. One pension manager gang. Join the switch gang today.
Stanbic IBTC Pension Managers, a member of Standard Bank Group.
How do you navigate your Stanbic IBTC mobile app? First things first, if you haven't downloaded the app, you should immediately open your Google Play or Apple Store, search for the keyword Stanbic IBTC, then click on download. It's that simple. Once you've opened the app, click on pension, then input your RSA PIN and passcode. This same password applies on the mobile app and on our website, www.stanbicibtcpension.com. If you can't remember your passcode,